January 1st, 2026, the world of silver changed for good. In a move that sent a shockwave through the financial world, China rolled out a strict new licensing system for all silver exports. This wasn't some minor policy update, it was a strategic power play. Beijing now has direct control over an estimated 60% to 70% of the entire world's refined silver supply. This decision has essentially turned silver from a simple commodity into a strategic weapon, right up there with rare earth metals. The market was already struggling with a serious supply deficit that's been going on for 5 years, but this policy just threw gasoline on the fire. So today we're going to break down what these new rules are, why China is doing this now, and what it means for the price of silver. More importantly, we'll explain how this shift affects everything from the phone in your hand to the solar panels on your roof, and what you need to keep an eye on in your own portfolio. This is a story about supply, power, and the future of tech, and it's happening right now. So what exactly changed on January 1st? China's Ministry of Commerce launched a new framework that says all silver exports have to be approved by a government-issued license. This replaces the old quota-based system with something way more strict and selective. To even get a look in for a license, companies now face two huge hurdles. First, they need an annual silver production capacity of at least 80 tons. Second, they have to show a verified credit line of over $30 million. These rules slam the door on hundreds of small and mid-sized producers who were a key part of the global supply chain, feeding silver to industries all over the world. Instead, export power is now in the hands of just 44 large state-approved companies. To get why this is such a big deal, you have to understand the difference between mining silver and refining it. While China is the world's second biggest silver miner, its real power comes from its absolute dominance in refining. China controls a massive 60% to 70% of the global market for refined silver. Their model is brutally effective. Import raw silver ore from all over the world, process it in their huge modern refineries, and then export the finished high-purity product. The numbers are huge. In 2024 alone, China's silver exports were worth a staggering $3.8 billion. This makes China the undeniable gatekeeper of the world's refined silver. With these new licensing rules, Beijing didn't just build a gate, it has seized the only key. This move by Beijing isn't random. It's a calculated strategy that analysts are calling resource nationalism. By putting silver under the same strict state-controlled licensing system as rare earth metals, China is officially calling it a critical strategic asset. The message is loud and clear. The clean energy transition runs on metals, and whoever controls the metals controls the transition. Beijing is focused on securing its own supply for industries that are vital to its future. The country's massive plans for solar energy, its booming electric vehicle industry, and its push into high-tech electronics and 5G all need huge and growing amounts of silver. This policy makes sure Chinese industries get first dibs, and the rest of the world gets what's left. We've seen this playbook before. China already has a stranglehold on materials like gallium and germanium, which are essential for semiconductors. They've used that leverage in the past to create a rare earth squeeze, causing prices for Western manufacturers to explode. Now they're applying the same strategy to silver. By restricting exports, China is making the world face a new reality. Those structural supply shortages that were just numbers on a spreadsheet are about to become a very real crisis. This isn't just about business, it's about power. By controlling the one metal that is essential for green technology, AI, and modern defense, China gains a powerful tool to influence global markets and politics. The fallout from this supply squeeze will be felt everywhere, in the industries that form the backbone of our modern world and our green future. Let's get specific. First, the solar industry. Every photovoltaic solar panel needs silver to work. about 20 grams of it, thanks to its unmatched ability to conduct electricity. As silver prices climb, the cost of making solar panels goes up, putting a huge question mark over green energy projects everywhere. Next, electric vehicles. The average EV needs between 25 and 50 grams of silver for its complex electrical systems. As the world rushes to go electric, this policy could throw a serious wrench in the works for automakers. Then you have the entire world of electronics. From the smartphone in your pocket to the advanced semiconductors that power our digital lives, silver is a critical ingredient that's hard to replace. This even extends to the massive data centers needed for artificial intelligence, which will consume enormous amounts of electricity, much of it planned to come from silver-dependent solar power. Finally, there's national security. Silver's unique properties make it vital for a lot of high-tech military hardware, adding a layer of concern for countries that rely on Chinese supply. Economies in North America and Europe are now staring down the barrel of higher costs, logistical chaos, and a desperate hunt for new suppliers that barely exist. This isn't some far-off problem, it's a direct threat to the supply chains that build our world. This supply shock is already hitting the markets and creating a new reality for investors. If you're finding this breakdown useful and want to stay ahead of these huge shifts, a quick sub to the channel and a like on the video really helps us keep making deep dives like this. Your support lets us continue providing the analysis you need to navigate these times. Naturally, this market earthquake has sent the price of silver on a wild ride. In the run-up to January 1st, silver surged, hitting record highs. By mid-January 2026, it had pushed past $88 per ounce. So where is the price going from here? Analysts are looking at a few different scenarios for 2026. Bullish forecasts, fueled by the intense supply chokehold and relentless industrial demand, see silver potentially surging to $120, $175, or even as high as $220 per ounce. More moderate outlooks are calling for something around $100. Even the bears think the price will hold near a historically high $90 per ounce. One analyst even calculated that the price would need to hit an incredible $134 per ounce before you'd see any major drop in demand from the solar industry, which shows you just how much room the price might have to run. But to really get the price action, you have to look past the headlines at the fight between paper silver and physical silver. The paper market, mainly the COMEX futures exchange, is dangerously over-leveraged. Some estimates suggest the ratio of paper claims to actual physical silver is as high as 350 to 1. This means any big rush to take physical delivery could set off a catastrophic short squeeze. Meanwhile, the physical market is screaming tight. Inventories in Shanghai have hit 10-year lows. COMEX registered inventories, the silver that's actually available for delivery, have cratered by nearly 70% since 2020. Refiners in the US and India are saying they're running at full tilt and still can't keep up with demand. This disconnect, where paper markets are volatile but the physical supply is incredibly scarce, creates the potential for an explosive move up. But for all this talk of an immediate supply lockdown, there's a fascinating twist to this story that most people are missing. Despite all the fear and the new regulations, it turns out that China's silver exports in 2025 actually hit a 16-year high. How is that possible? The answer seems to be in a loophole related to processing trade rules. These existing frameworks appear to let refined material be exported without the same regulatory hurdles. This means that for now, the bulk of China's silver is still flowing out. Some analysts have pointed out that China was already licensing exports, and that the new rules were more of a tweak, with the number of approved exporters even ticking up from 42 to 44. This suggests the immediate catastrophic supply crisis that many feared might not happen overnight. However, and this is the most important part, this doesn't change the fundamental long-term risk. The framework for a total lockdown is now built. Beijing has its hand on the switch. They can choose to tighten the rules or change their interpretation at any time, turning the current controls into a full-blown ban. The immediate crisis might be overblown, but the long-term strategic threat is very, very real. So what's the bottom line here? As of 2026, the silver market is playing by a new set of rules. China has tightened its grip on the world's refined silver supply with a strict licensing system. This isn't just about economics. It's a strategic move to prioritize its own industries and give it massive leverage over the rest of the world. This creates huge risks for the supply chains that our green energy, tech, and defense sectors depend on, while also putting huge upward pressure on the price of physical silver. So what can you do? For investors, the key strategy is diversification. And that doesn't just mean your assets, but also diversifying geographically. Look for opportunities in companies that are actively trying to build new supply chains outside of China's control. Western governments are already starting to react. Policies like the U.S. Inflation Reduction Act and the EU's Critical Raw Materials Act are designed to boost domestic mining, refining, and recycling. The companies that are set to benefit from this push for supply chain freedom could be a major long-term opportunity. The new age of silver is here. It's going to be defined by volatility, geopolitical games, and a growing awareness of silver as a truly strategic asset. The question is no longer if our supply chains are at risk, but what we're going to do about it. Will the West manage to build its own independent sources of this critical metal, or will the path to our clean energy future be paved and priced by Beijing? Drop your thoughts in the comments below. History rhymes. Power rebrands. Stay inquisitive.